Okay, good morning to all the students. So today we are starting a new topic in financial management. Topic name is leverage analysis. This topic is part of your financing decisions. Okay, in financial management, finance manager has to take four major types of decisions. First decision is investment decision or capital budgeting. Second decision is financing decision. Third is working capital. And last and final fourth decision is dividend decision. So investment decision or capital budgeting decision refers to when company investing in the capital project or any capital asset, whether investment is profitable or not. That will be evaluated by using some of the capital budgeting techniques. Okay, it means before investing they will evaluate the project through some capital budgeting techniques. So from those techniques, if decision is in favor of project, investment will be decided or recommended. Otherwise, investment is not recommended. They will go for another project. Okay. This is called as capital budgeting or investment decisions. Second decision is financing decision. Suppose you are decided ki I have to start this project. So starting that project requires funding. So from where funding will be arranged? That decision is called as financing decision and capital structure decision. Okay. So that is actually called as capital structure decision, but capital structure is a part of financing, because whenever finance manager brought the funds, that will be called as financing. So whether it's financing through equity, debt, preference or any other combination. So in what way finance manager is procuring the funds, that decision will be called as financing decision. So he may use combination of equity debt, he may use combination of equity debt preference, or sometime he may prefer only equity. So which combination is best, that will be decided through financing decisions. So in this, cost of capital is also calculated, value of the organization is also calculated. So any combination in which cost is minimum, value is maximum, that combination will be considered as optimal capital structure. And according to that, finance manager will decide ki how to raise the funding. Okay. And whenever he is deciding about the capital structure, in capital structure, compulsory there is a debt combination also in some cases. In some cases, there is no debentures also. So whenever there is a debt, on debt there is a risk. What kind of risk? If company is earning profit or company is not earning the profits, company has to pay interest. So this is the risk. Okay, so this risk is called as finance risk. This finance risk is generally arising due to financing decision. Suppose the finance manager is not procuring the funds through debenture, then there is no finance risk. In capital structure only he want equity. From equity only whatever funds required he want to raise. Then there is no debenture in that. So when there is no debenture, there is no risk on the company. It means compulsory is not, means company will not have the obligation to pay interest. Because interest is the expense or charge which is compulsory to be paid by company irrespective of profits or losses. Even if company earning profits also it has to pay. If company suffering losses also it has to pay. So this is what? Finance risk. So this risk is arising due to financing decision. Okay. So financing decision whenever take place, finance manager has to check risk return relationship also. So whenever he is checking the risk return relationship or analyzing the risk return relationship, that analysis will be called as leverage analysis. So leverage analysis simply means whether there is a risk in the financing decision or not, whether there is a risk or not, it has to be evaluated or analyzed. So it means more debentures in the financial structure or capital structure, risk will be high. If debentures are less, risk also less. Suppose company needs 10 crore rupees funding. Company needs 10 crore rupees funding. So in 10 crores, he wants 60% equity, 40% debenture. Okay. Second option, 40% equity, 60% debenture. Third option, 30% equity, 70% debenture. So in which combination debentures are high? In that, finance risk will be high. In that, finance risk will be high. Understand? So when debentures increasing in the capital structure, accordingly finance risk will also increase, because company has to pay interest. So interest obligation is the finance risk. That's why these decisions are called as financing decisions. This is the reason this is called as financing decisions. Understand? Next is working capital decisions. Working capital decision means, suppose already company decided they have to purchase this plant machinery, they have to invest in this project. So only after purchasing plant and machinery or arranging the funds required for plant and machinery is not sufficient. Only if plant and machinery available means production will not possible. To start the production, to complete the production, raw material, labor and indirect expenses also company has to incur. So the amount which is required for raw material, labor and indirect expenses, they have to estimate how much amount is required. So this estimation regarding working capital needs, or this is called as estimation for raw material, work in progress, finished goods, debtors and creditors. This management is called as working capital management. Only plant and machinery ready means production is not possible. So we have to purchase raw material. So raw material will be purchased on credit. So when it purchase on credit, creditor will arise. When labor is appointed on plant machinery for production, payment is due. So outstanding balances will come. Some of the indirect expenses will be also outstanding. So all this is part of your operational activities. So the amount which is required for day-to-day operating activities is called as working capital. For working capital is current assets and current liabilities difference. Without working capital, we cannot operate the business, because operating the business, some funding is required. So this funding is called as working capital. So working capital decision is also one of the important decision in financial management. And last and final decision is dividend decision. Dividend decision is relating to your distribution of profits. If company earned the profits, now company want to decide whether dividend should be distributed or it should not be distributed. If distributed, what will be the impact? If company want to distribute, how much should be distributed? Okay, in this way decision will be taken. So these decisions are called as dividend decision. Ultimately your entire subject is divided into 4 decisions: investment, financing, working capital and dividend decision. The entire subject is between these 4 only. After learning all topics, you will understand that entire subject is between these 4 only. Okay. So today's session we are going to start one of the important topic of financing decision. Okay. So the topic name is leverage analysis. So in financing decisions we have leverage analysis, capital structure, EBIT, EPS analysis and cost of capital. These are the topics relating to your financing decisions. Yesterday already given the index, clear, chapter index. In that clearly I mentioned ki in financing decision we have 4 topics: cost of capital, capital structure, leverage analysis, EBIT, EPS is also part of capital structure. Okay. So today we will start leverage analysis. Okay. Really concentrate. First, before starting this topic, we have to understand why you are learning this topic. What is the necessity of learning this topic? Suppose you are a entrepreneur of one business or you are a CFO of a company. So in your company or in your business, you have to assess the risk. Like you joined CA course, CMA course, there is a risk or not? What is the risk? Pass percentage is less. That is the risk. What is the return? High package is return. Compulsory employment is return. So you will analyze risk return or not before joining the course. Definitely will analyze. Clear? Similarly, UPSC, very high risk. UPSC course, return is also very high. Correct or wrong? BCom, very less risk. Returns also very less. Sometimes there is no return also. So high risk, high return, low risk, low return, no risk, minimum return. So this is the analysis. So in this topic, we are going to discuss risk-return relationship. Risk-return relationship. When risk will increase, when risk will decrease. If risk increases, what will be the impact? If risk decreases, what will be the impact? That we are going to discuss in this chapter. That's why this chapter is called as leverage analysis. Leverage means, suppose you have one capital structure. Capital structure means what? First you should understand. Capital structure means clearly, yesterday I explained ki this subject you have to learn from corporate point of view, company point of view. This is not from partnership firm, proprietary point of view. If your mindset is proprietary partnership, you will not understand this subject. Because in proprietary concern partnership firm, there is no equity share debenture. There is no equity share debenture. So automatically you will not understand this. So capital structure means it is a combination of funding. It is a combination of funding. Because financial management subject is broadly categorized into two. One is procurement of funds. Second is effective utilization. Effective utilization of funds. Okay, effective utilization of funds means investment. Procurement means financing. Understand? So procurement of funds means this is financing. Financing decision. Okay, effective utilization of funds means this is your investment decision, and working capital management. Working capital management. Okay. So in financing decision, we need to understand first what is capital structure. Capital structure means if company requires any funds. Why company requires funds? So many reasons. Either for expansion, or to invest in a project, or to purchase some plant machinery, or working capital requirements. So many reasons will be there. Mostly financing will be required for expansion or investment in capital project or investments in working capital. For these areas, they need what? Funding. In companies, funding is also very high. It is not like 10 crore, 20 crore. Sometime it will be in 1000 crores also, lakhs of crores also. This is the reason key. They will try to raise the funding through different combinations. Different combinations. Okay. Suppose capital structure means it is a combination of equity shares, preference shares, debt, Okay. Debt includes loan also, debentures also, bonds also. Debt means it is one type of loan which has to be repayable. So company will have these three options. Whenever they want funds, they can raise through equity, they can raise through preference shares, they can raise through debentures. Okay. So in balance sheet, equity capital, preference capital, debt, all will be on liability side, equity liability side. Okay. That's why this is called as capital structure. This is called as what? Capital structure. It means from what are the different types of sources from which company has raised the funds. What are the different sources from which company has raised the funds? That's why this is called as what? Capital structure. So what is the structure of their funding? What is the structure of their funding? So this is termed as what? Capital structure. In capital structure, sometime only equity can be possible. Equity and preference shares. Sometime only equity possible. Only equity possible. Suppose in this structure there is a debt. In this structure, no debt. In this structure also, no debt. Right? So whenever there is no debt, there is no finance risk. There is no finance risk. Here also there is no finance risk. But here there is a debt, so here there is a finance risk. In very simple words, whenever there is a debenture in the capital structure, there is a finance risk. And whenever there is a risk, then finance manager has to analyze risk return relationship. Risk return relationship. So here finance manager has to analyze risk return relationship. So this risk return relationship analysis is called as leverage analysis. This is called as what? Leverage analysis. Now risk means at what rate you have to pay interest to the debenture holder. Understand? Because when you procure the funds from debentures, you have to pay interest. Even company is not earning profits also, company is earning profits also. Company has to pay interest. So this is risk. Okay, if company is earning more than at what rate they are paying the interest, in that case return is more, risk is less. So company can go for risk. If company is not earning more than what they are paying, so risk is high, return is less. In that case, company will not prefer to take the risk. Very simple. Now you are capable of doing CMA CA course, बैठो यहाँ पे, नहीं तो सीधा गुड बाय करो, घर में आराम कर लो. Means every student will have different capabilities. Some students will be weak in studies, but they are in very knowledgeable in other areas. I am not degrading any student here. Prerequisites of CA CMA course I am saying. Prerequisites of CA CMA course is what? Here you have to allocate a substantial amount of time for studies. Then only we can become a good professional. Suppose you are an extraordinary God gifted type intelligent person, so with less time also you can manage this. But prerequisite is what? Definitely we should allocate a substantial amount of time to pass, because here risk is little bit high. So if you manage that risk, then you can continue with this course. If you do not manage that risk, it is your decision now. After writing the examination, risk return will not analyze. Before only. Finance manager will not analyze risk return after raising the amount through debenture. Before raising the amount through debenture, we will analyze. After raising, compulsory we have to pay the interest. So before raising the funds through debentures or loans, he will analyze. A company will earn more than the rate at which we are paying the interest, less than that. Okay, if company's rate of return is more than that, then finance manager simply advise, yes, our rate of return is very good, so we can raise the amount through debenture, because after paying to debenture holders their interest also, some amount is available, so that we can use for our other activities. Clear? So risk return relationship is very much important in every aspect, not only in financing decision, in your regular life also. Okay, my friend joined CMA course, I will also join, means that is not called as risk return analysis. Some person XYZ told this course is easy, easily you can pass, you join, that is not called as risk return analysis. You have to check risk return analysis through your syllabus content, past results, and after attending some classes you will understand, and after talking to the existing students you understand what is risk return. Okay, this is one example. Why I am giving this example means students should decide they are correctly managing their positions in course or not. Okay, so now come to the company side. So in company, how finance manager will analyze this risk return? So whenever risk word is coming, risk means what? First of all, risk means uncertainty. Whenever there is uncertainty, there is a risk. So risk is arising due to uncertainty. Okay, if you are certain, there is no risk. Whenever there is uncertainty, risk factor will there. Always remember, risk will arise due to uncertainty. Uncertainty means what is going to happen, we don't know. Paper will be simple or difficult, we don't know. Result will be less or more, we don't know. Last CA final result, if you see, second group result 33% they released. 33% is very high percentage. Generally, like MBA course, they release the result. So luck. So here, CA final second group student, most of the students pass. Clear? Because 33% result release. So here, institute will also play same thing. If demand is high, they will give good result. If demand is less, generally result can be limited also. So depends on what? Market demand also. So here what result will come, we don't know next time. Whether I can say next time also 33% result? No. Uncertain. So whenever there is uncertainty, risk will be there. So risk is arising due to uncertainty. Company will earn profits, company will not earn profits, that is not 100% sure. Okay, so whenever there is uncertainty, a risk will arise. Okay, now this risk, in this topic we have to understand this risk in two different parts. One is business risk, or this is also called as operating risk. Second is finance risk. So business risk or operating risk, finance risk. So business risk or operating risk means this risk is related to business. This is not relating to your capital structure. This risk is not relating to your capital structure. Because in your capital structure, if debenture is there or debenture is not there, this risk will not be affected from that. This risk is arising due to operating cost of the business. Which cost? Operating cost, fixed operating cost. Fixed operating cost. To run the business, we have to spend two types of cost. One is variable, another is fixed. Okay, variable cost will be recoverable immediately when one unit is sold out, right? But fixed operating cost, there is a risk. There is a risk because variable cost will be incurred only when there is a production required. If there is no production, variable cost required? No. So today you receive this material. Yesterday you received this. Why? Yesterday, how many students joined? That is not confirmed. So today, they understand that this many students will come. So accordingly, this material is prepared. So this is variable. If more students come, more material dispatch. Less students, less material. Okay. So in business also, if demand is high, production more required, more variable cost. If less demand, less production, less variable cost, because less raw material required, less direct labor required. But fixed cost, if there is no demand also, we have to incur the fixed cost. If there is a demand also, we have to incur the fixed cost. So fixed cost is compulsory to incur irrespective of demand. Sometimes there is no demand also, COVID. We spend fixed cost or not? So many organizations paid the rent. So many organizations paid salaries. Even people are residing in the lockdown situation. So that is called as fixed operating cost. So fixed operating cost means even there is no productivity also, company has to incur. Company has to incur. It is called as what? Fixed operating cost. But variable cost will be incurred only when there is a demand, production, sale. Otherwise, variable cost is not incurred. So now in variable cost, fixed cost, where there is a risk, fixed cost only. So the risk which is arising due to this fixed cost is called as operating risk or business risk. So to calculate this risk, the formula or the tool which we use here is called as operating leverage. Operating leverage. So to calculate the operating risk of the business, we will use operating leverage tool. So by calculating operating leverage, we understand ki what is the operating risk of the business. Operating risk of the business is higher, operating risk of the business is lower, or it is moderate. So what is your business risk or operating risk? If finance manager want to analyze, he will calculate, he will use operating leverage. So operating leverage is purely arising due to your operating cost. If operating cost is more, operating risk will be more. If operating cost is less, operating risk will be less. Similarly, leverage will also result in same way. If operating cost is high, operating leverage will be high. If operating cost is less, operating leverage will be less. Understand? See, financial management subject required matured mindset. Is required what? Matured mindset. You should sit in the class like a matured person. Okay? Then only you will enjoy this subject. So fixed operating cost. So operating risk is arising, fixed operating cost. So if operating cost is high, risk will be high. If operating cost is less, risk will be also less. Okay. Now there is a question in mind of students. Don't write anything, everything in crystal clear way available in the note section. Only you should concentrate here. Okay. Notes separately I will give. Don't worry. So why this risk will increase, decrease? Why? Suppose you are thinking that my business is growing, so you will employ some extra staff. If your business is growing, you will take one premises, extra premises, so your rent will increase. Staff increases, your salaries will increase. So this will increase your operating cost. So whenever this increases, risk is also increasing. Now, when risk increasing, earning should also increase or not? If earning is not increasing, you want to appoint extra staff. If earning is not increasing, you want to take extra premises and you want to pay extra rent? No. If there is a indication, if there is a signal that my earnings will increase in future, my business will increase in future. So because of my business increasing, my earning also increasing. So if I appoint extra staff, then it will be convenient for me. I can convince the customer, I can reach the customer more fast. So in that case only, organization will try to spend extra cost, extra fixed cost. Otherwise, why organization will try to incur extra cost? Clear? So when there is an indication that their earnings can increase. So when earnings can increase? When sale increases. When sale increases. So when there is a possibility of sale increase, earning increase, then only organization will try to increase the operating cost of the business. Otherwise, they are not interested to incur or increase the operating cost. So nowadays, trend has been changed. Simple example I am giving here. See, nowadays trend has been changed. Most of the students want to attend the classes from home. Live streaming they want, or recorded classes they want. Okay. So maximum number of students are not interested to come for face-to-face classes. This is, we understand. This is not only this academy situation. Throughout India, same situation is there. Throughout India, same situation. Because in COVID, students are habitual to sit at home. Okay. So it will take time to change that habit. गंदी चीज आना जल्दी आता है, जाना दूर टाइम लगता है उसको. Bad habits will come fastly, but it will not out from your body very fastly. Okay? Are you understanding? It will take time. So suppose this is the situation. Now we want to take one extra room. So my decision is correct or wrong? Wrong. In this classroom only all students are not coming. So I have to go for another room. Here capacity 60-70 students, 50 coming maximum. I want to take 100 students extra hall, means my decision is wrong or correct? Wrong. Unnecessary, I am increasing my fixed cost by taking the extra premises. Suppose I want to appoint 2 extra staff members. That decision is correct or wrong? If I appoint 2 extra staff members, those staff members will work on what? Online classes, recording classes, arranging all this. Then it will be correct. Previously it is not required, but now trend change na? Required. So accordingly, business will also spend the fixed cost, or they will increase or decrease the fixed cost. Understand? If there is necessity and there is an indication that income increases, then fixed cost will also, they will increase. Otherwise, they will continue with the same. Sometimes fixed cost will increase due to other reasons also, like they are increasing the productivity, they are changing the plant size, manufacturing plant size layout they are changing. Automatically more staff is required, big premises required, so because of that also sometime operating costs will increase. Okay, always remember, operating cost increases means risk increases, operating cost decreases means risk decreases. Okay, so when operating cost increasing, risk increasing, return should also increase. So here return means what? Increase in sale, increase in EBIT, increase in sale, increase in EBIT. If sale is not increasing, EBIT not increasing, in what way your operating cost is increasing? It means your return is less, risk is high, that is not viable, that is not viable. Understand? So this operating risk is measured by operating leverage. This is measured by operating leverage. Understand? अब इसको पूरा मैं समरी में दिखाता हूँ. Okay, notes don't means there is no need to write any notes. काफी अच्छे नोट्स रहते हैं मेरे पास, देख लीजिए आप. देखिए पूरा रेडीमेड स्ट्रक्चर है मेरे पास. Clear? In your material also notes available, here also notes available, and these notes totally different रहते हैं. If same students will not write. Okay, so this is very simplified version of notes which I am showing on the screen. So देखिए, leverage analysis is this technique which is used to quantify risk return relationship of different alternatives of capital structure. Different alternatives of capital structure means this one. This is alternative one, equity, preference, debt, equity, preference, equity. इसको बोलते हैं different sources of capital structure. So in one capital structure there is a risk, in other two there is no risk. Okay, sometime in all structure there is a debt, but percentage of debt is different. In one structure it is 60, another structure 40, another structure 30. Okay, so risk exists because of lack of certainty. In other words, it is uncertainty. In other words, it is what? Uncertainty. Whenever there is a uncertainty, risk arises now. So risk is divided into two categories: business, finance. Business risk is called as what? Operating risk. Business risk is called as what? Operating risk. So business risk is called as operating risk. Okay, so this risk is arising due to operating cost. If operating cost increases, operating cost decreases, this risk will increase, decrease. So it is generally connected with what? Sales and EBIT. Sales and EBIT. Earnings. If sale is increasing, decreasing, and fixed cost is increasing, decreasing, ultimately EBIT will also increase, decrease now. So ultimately, whenever we calculate the business risk, EBIT is important. What is important? EBIT. Earning before interest and tax. Now earning before interest and tax means what? I hope all students learn marginal costing chapter in group 1. In marginal costing topic, okay, even if you have not having any idea about that, focus here. So this is called as income statement. In income statement, first we will write sales. From sale, first we deduct variable cost. So sale minus variable cost, contribution. Then minus fixed cost. Then this is called as EBIT. Understand? Then minus interest. This is called as EBT. then minus tax. This is PAT, or earning after tax. Thereafter, minus preference dividend. This is called as net earnings to equity shareholder. Net earnings to equity shareholder. Why net earnings to equity shareholder is calculated? Because ultimate owners of the company are equity shareholder. Preference shareholders are not owners of the company. Debenture holders are not owners of the company. They are providers of finance only. Ultimately, who are the owners? Equity shareholder, because they have voting right. We will select in each and every area by voting equity shareholders. So these are the original owners of the company. So according to equity shareholder point of view, this is calculated, net earnings. Okay. So try to understand now what I am saying. So contribution minus fixed cost, what is coming? EBIT. Suppose if my fixed cost is increasing, what is increasing? Fixed cost. So my EBIT will increase or decrease? EBIT will decrease. Simply. Because contribution minus fixed cost, what is coming? EBIT. If fixed cost increases, EBIT will decrease. Similarly, if fixed cost decreases, EBIT will increase. So here also explanation is given in the same way. Business risk can be defined as variability of EBIT. As variability of EBIT. It means if fixed cost increasing, decreasing, ultimately what is changing? EBIT. So business risk is nothing but what? Variability in EBIT. Variability in what? EBIT. Fixed cost increases, EBIT decreases. Fixed cost decreases, EBIT increases. Understand? So this is the reason key. This is called as what? Variability in EBIT. Okay? Clear? See, if this point is not clear, I will repeat one more time. If this is clear, I will continue. I am giving 100% guarantee कि the students who attended classes here, they understand this. उनको मैं पूछने की जरूरत ही नहीं है, क्योंकि वो लेवल पे लेके गए उनको पढ़ा के अपन. बाकी के स्टूडेंट जो दूर से दूसरे एकेडमी से है, मेरे को नहीं मालूम क्या पोजीशन है उनका. अपने पास जो बच्चे पढ़े उनको पूरा उनको समझ में आ गया. मैं बिना देखे बोल देता हूँ, क्योंकि सब्जेक्ट अपन वैसा बनाया स्टार्टिंग से, क्योंकि मालूम सेकेंड ग्रुप में अपने को पढ़ाना पड़ता है. तो पहले से अपन क्या कर दिया, उनको ऐसा मोल्ड करे कि सेकेंड ग्रुप में बैठे तो समझ में आ जाना उनको. बाकी के स्टूडेंट का मेरे को नहीं मालूम, क्योंकि मैंने पढ़ाया ना भाई. तो इट इज योर रेस्पॉन्सिबिलिटी, यू शुड शेयर. So this point is clear, or shall I repeat? This is very simple point now. If your fixed cost is increasing, EBIT will decrease. If fixed cost decreasing, EBIT will increase. So business risk you can define in different way also. There are different ways of defining the business risk. One is operating risk. It means fixed cost increase decreases, business risk increase decrease. Another way is what? If EBIT changing, that is also called as what? Operating risk. That is also called as what? Operating risk or business risk. So this point clear now? Right. So it results because of internal and external environment in which the firm has to operate. So always remember, operating risk is unavoidable. Operating risk is unavoidable. Very simple reason. You cannot remove entire stuff. And you cannot do the business without paying rent also if you are using rented premises. Both are not possible. If you have your own premises, then you can do the business from your own building. but you don't have your own premises. You have to take the premises on rent or not, either from X or from any other person. So payment of rent is necessary or not? Without paying rent, you can operate the business or not possible. Without a staff member, you can operate the business or not possible. So without incurring fixed costs, we cannot continue the business. We cannot operate the business. Without incurring fixed costs, we cannot operate the business. So fixed cost is mandatory. It is a part of business. So without fixed costs, we cannot run the business. We cannot operate the business. That's why this is unavoidable in nature. This is what? Unavoidable. Sir, I want to do the business only by incurring variable cost. Not possible. Not possible. Why? You need administration service also. You need selling and distribution service also. In that, fixed payments required or not? Salary, rent, administration cost. These people will get the remuneration on monthly basis or hourly basis monthly. Rent payment monthly. Staff salaries monthly. So administration expenses monthly. So without fixed cost, we cannot operate the business. That's why without fixed cost, we cannot operate the business. This is called as unavoidable. Unavoidable. Simple example. Suppose you are taking your breakfast, lunch or dinner. Especially you are taking suppose rice. Without wasting, you can complete your lunch or dinner. Some wastage will take place or not? That is avoidable, unavoidable. Compulsory some wastage will take place or not? Without wastage you complete your dinner or lunch? Not possible, especially rice item. Compulsory some content will be wasted. Okay? Even if you try maximum also, compulsory some portion will be wastage. So that is unavoidable. Okay? Like painter is painting. Without falling one drop of paint, he can paint the entire room. That is possible, unavoidable. So this is also unavoidable. So in some situation, we cannot avoid the things. So here, without fixed cost, you cannot expect any business. Without fixed cost, you cannot expect any business. So business may variable, fixed, both are important. First, business will start from fixed only. Then variable will start. That's why this is unavoidable in nature. Okay? So mostly this risk is arising due to capital budgeting decision. Which decisions? Capital budgeting. Whenever you invest in a capital project, so in that high operating costs will be there, staff members will increase, big premises will be required, fixed operating costs will increase. So this business risk mostly increases due to capital budgeting. Which decision? Capital budgeting. Understand? If your business is not growing, you will increase fixed cost. No. Your business growing, you purchase big plant machinery, you install big plant machineries, then fixed cost will also increase. So this risk is arising due to investment decisions. So it is associated with investment decision. So it is measured by operating leverage. It is measured by operating leverage. So this business risk is arising due to investment decision. It means if your investment increasing, operating costs increase. Your investment not increasing, operating costs will not increase. Risk will also not increase. I hope you understand all these points. Right. Now, this operating risk will not affected from financing decision. This operating risk will not affected from financing decision. It means if organization procuring the funds through debenture or equity or preference, or they are procuring through equity, here it will not impact anything. Here only what will impact? Fixed operating cost. Which cost? Fixed operating cost. And fixed operating cost generally increase, decrease due to capital budgeting decision. Investment decision. Which decision? Investment decision. Suppose previously you are running a small factory. Okay? Suddenly you met with one MLA MP. That MLA MP impressed from your business model. Now that MLA MP is providing some orders to you. Now you decided to expand your business. You purchase big plant and machinery. Now fixed operating cost increase or not? So when fixed operating cost increases, risk is also increases. Understand? Now next is finance risk. I hope business risk you understand. Now how to calculate the leverages? That is second part. How to calculate the leverages we discuss in second part. Okay? First you should understand entire risk. Why you are learning? ये अपने पास कैसा पड़े होती है सुन लो. अपने पास पूरा ड्रिलिंग होके सी डेप्थ में जाते हैं अपन लोग. ऊपर ऊपर से नहीं, समंदर के ऊपर ऊपर तैर के नहीं आते अपन. पूरा डेप्थ में जाना पड़ता है अपने को. क्यों? बिकॉज पेपर पैटर्न्स हैज बीन चेंज इन CMA कोर्स. अब वो आसान पेपर नहीं आ रहे CMA में, CA सेट ऑफ पेपर आ रहे हैं यहाँ पर. वो तो कॉन्सेप्ट पॉइंट ऑफ व्यू, इसलिए आप ऊपर ऊपर पढ़ेंगे, ऊपर से ऊपर निकल जाते फिर. ओके, तो प्लीज ट्राई टू अंडरस्टैंड इन कॉन्सेप्चुअल वे ओनली. यू शुड लर्न दिस सब्जेक्ट. प्रॉब्लम सोल्यूशन कर लिए, हो गया नहीं चलेगा. अब चेंज योर लर्निंग मेथोडोलॉजी. ओके, यू आर इंटरेस्टेड, यू कैन कंटिन्यू विथ माई वर्डिंग्स. ऑलरेडी लास्ट टाइम में जो बोला वही हुआ ना. शुरू से पढ़ो बोला, सुने बच्चे मेरी बात. लास्ट में कितना तकलीफ हुआ ना सबको. इसलिए मैं जो भी बोलता हूँ काफी कैलकुलेटेड वे में बोलता हूँ मैं. तो मेरी बात अगर फॉलो करे फायदे में रहते आप. जितने भी अच्छे डिजर्विंग फैकल्टीज है सब लोग यही बोलते हैं, मैं जो बोल रहा हूँ वही बोलते बोलो. चलिए नाउ फाइनेंस रिस्क. Finance risk is generally arising due to financing decision. Now financing decision already I explained. If you are a finance manager, you need funding for the company. So in which combination you will procure? Equity debenture preference, equity debenture, equity preference. So in which combination you want to raise the funding? That decision is called as capital structure decision or financing decision. So in your capital structure, if there is a debenture or loan borrowing, then there is a risk. If there is no debenture, loan borrowing, there is no risk. Because on equity shares and preference share, there is no obligation to pay dividend. If company earning profits, then only they will think about payment, declaration and payment of dividend. If there is no earning, there is no mandatory provisions in law. The company has to pay dividend. Already you learned this topic in Group 1 law paper, section 123. कहाँ पे पढ़ते हैं आप लोग? Section 123 dividend. Okay. So in this section clearly they mention कि dividend is payable to equity shareholder from earnings of the company or from accumulated profits of the company. Okay, so there is no mandatory provision in law कि company should declare and pay the dividend. It is depends on will and wish of the company. If company directors think कि dividend declaration is required, then they will declare and pay. Otherwise, they will not declare and not pay also. So in that case, shareholder cannot challenge them and cannot demand for the dividend. But debenture holder, suppose you raise the funds through debenture, compulsory you have to pay interest. Compulsory you have to pay principal amount also. If you do not pay interest, if you do not pay principal amount, there is a violation in Companies Act also. Section 72, 73. Section 72, 73. Clear? So board of directors will be in trouble also. they will be in default position. That's why payment of interest also mandatory, payment of principal amount also mandatory. Clear? Especially interest. So interest is mandatory to pay even if there is no profit also, even if there is a profit also. That's why risk is arising because of debenture or loan. Risk is not arising from preferential equity share. Risk is arising from debenture. Because on debenture, compulsory interest we have to pay. Clear? That's why this risk is called as finance risk. So in your financial decision or capital structure, if debenture, there is a compulsory obligation to pay interest. So there is a risk. Risk of interest also, risk of principal amount repayment also. For equity share, principal amount repayment obligation is there? No. Even if company is in very profitable situation, then only they will think about buyback. Okay? But equity shareholder का पैसा equity shareholder को वापस करना है बोलकर गारंट कुछ obligation है कंपनी पर? No. But debenture holder, once you raise the funding, you have to repay or not? Interest also. So this is the risk situation. That's why business finance risk is arising due to involvement of debt in capital structure. Involvement of debt in capital structure. Understand? मैंने काफी बार रिपीट कर दिया इस पॉइंट को, अब ज्यादा जरूरत भी नहीं चाहिए. Okay, right. Now finance risk can be defined as, see, we are discussing this income statement also. Only you should understand this area, which I am highlighting here. Suppose my EBIT is 1 lakh. If my interest is 10,000, this is 90. This is suppose situation 1. Situation 2, suppose my EBIT is 1 lakh, but interest is 40,000. Then earning before tax how much? 60,000. Now from these two situations, what you are understanding is, in first situation, suppose company is having 1 lakh rupee debentures, 10% debt, 10% debt. First situation, suppose they have 1 lakh rupee debenture. Second situation, suppose they have 4 lakh rupee debenture. Okay? So in first situation, according to 10%, how much interest will come? 10,000. Second situation, according to 10%, how much interest will come? 40,000. Understanding? 4 lakhs into 10%. How much? 1 lakh into 10%. How much? 10,000. So first situation, debenture interest is 10,000. Second situation, debenture interest is 40,000. Okay? Now in which situation your earning decrease? Second. Second में earning decrease हुआ ना? First situation earning comparatively more. Second situation earning decrease. Earning decrease because of debenture interest. Because of debenture interest. It means in second situation risk is high. In second situation risk is high. So this risk is finance risk. In first situation risk is less. In first situation risk is less. Because in first situation only have to pay 10,000 interest. Second situation I have to pay 40,000 interest. So in second situation risk is high, so earning decreases. In first situation risk is less, earning also increasing. So it means your EBT is changing. What is changing? EBT, earning before tax. So due to interest, what is changing? EBT. That's why your finance risk is also defined as variability in EBT. Variability in EBT. Because EBT changing or not? So variability means what? Badal jana. Variability means what? Maripovodam. ఫస్ట్ 90, now 60. చేంజ్ అయిందా లేదా? దిస్ ఇస్ కాల్డ్ as variability. What is changed? EBT change. So variability in EBT change because of what? Interest. Because of what? Interest. And interest is arising due to what? Financing decision. Interest is arising due to what? Financing decision. If you have not taken this financing decision, your interest will not change. Earning will also not change. Because of financing decision only, interest change, earning change. Suppose if I remove, I am not interested by, suppose company board of directors, CFO of the company decided ki they are not interested in debenture financing. This will not come. In both situation, EBT will also same lakh. 1 lakh रहेगा. कितना रहेगा? 1 lakh. Because interest will be 0 here and here also 0. So earning before tax also same, earning before interest and tax also same. Ultimately your earning before tax is changing due to interest. Due to interest. And interest is arising due to financing decision. भाई लोन लेना जरूरी थोड़ी ना है. कोई किताब में लिखा हुआ है क्या लोन लेकर ही करो काम बोलकर? No, loan is your decision भाई. If company interested, they can take the loan. Otherwise, they will avoid that. So this is unavoidable, not like fixed cost. Fixed cost is unavoidable because without fixed cost we cannot think business. But without loan we can think business or not. Yes, मैं कई सारे कंपनी के एग्जाम्पल देता हूँ जो बिना लोन के काम कर रहे. मार्क्स एंड फार्मा कंपनी है, ऑलमोस्ट ऑल 0% डेट है, फार्मास्यूटिकल कंपनी. डेल्टा कॉर्पोरेशन है, कैसीनो बिजनेस, नो डेट. सो मेनी कंपनीज आर देयर इन इंडिया, नो डेट. रिलायंस कंपनी ऑलमोस्ट डेट फ्री है. रिलायंस इंडस्ट्रीज ऑलमोस्ट ऑल डेट फ्री है. तो सो मेनी कंपनीज डेट फ्री कंपनीज है, स्मॉल डेट है काफी. तो विदाउट डेट ऑल्सो वी कैन ऑपरेट द बिजनेस, वी कैन डू द बिजनेस, बट विदाउट फिक्स कॉस्ट नॉट पॉसिबल. दैट्स व्हाई finance risk is avoidable. Finance risk is avoidable, but business risk is unavoidable. Understand? Clear है? अब क्वेश्चन पेपर कैसा है मालूम है? लास्ट टाइम आपको दिसंबर 22 में लिवरेज पे क्वेश्चन दिया उन्होंने, 4 के 4 आंसर सही हैं एमसीक्यू में. One question is given in MCQ, all 4 answers are correct. अब तुम सही पढ़ेंगे तो मालूम रहेगा चारों सही है बोल के. You learn in depth completely, then only you know ना all 4 answers are correct है. तो आप क्या समझेंगे? वो एक सही है. MCQ means what? Generally what student think? 1 answer correct, remaining wrong ना. एग्जामिनर क्या कराना है ट्रिक? 4 के 4 सही डाल दिया आंसर उन्होंने, कौन सा भी टिक करो मार्क मिल जाना बच्चे को. तो जिसके पास नॉलेज है, कॉन्सेप्ट है, उन्होंने मालूम कर लेता चारों सही है बोलकर. और जिसके पास कॉन्सेप्चुअल नॉलेज नहीं है उन्होंने क्या करेंगे? कोई ना कोई गलत होगा बोल के डरते रहता अंदर ही अंदर. उन्होंने डरता नहीं डरता है, इसलिए पूरा डेप्थ में पढ़ो सब्जेक्ट. ऐसा ऊपर ऊपर से मत पढ़ो क्योंकि पेपर चेंज हो गए हैं. अब रिस्क लेना आपके हाथ में. अब देख लो, रिस्क कम करना है, अच्छा डेप्थ में पढ़ो. रिस्क बढ़ाना है, ऊपर ऊपर से पढ़ो. फिर देख लो दिसंबर 22 का सजेस्टेड आंसर निकाल के आप. पूरे चारों आंसर सही है. पहले ही क्वेश्चन में कर दिया काम उन्होंने. मैं लास्ट भी नहीं बोल रहा हूं, फर्स्ट क्वेश्चन ही बोल रहा हूं मैं. फर्स्ट क्वेश्चन इन एफएम, ऑल 4 आंसर्स करेक्ट. तो इफ यू लर्न each and every point, then only you can understand ki all answers are correct or wrong. Okay, here this is avoidable because without finance also, without debt also we can operate the business, we can run the business, but without fixed cost we cannot run the business. That's why this is a avoidable. कंपनी चाह तो उसको अवॉइड कर सकता है, बिना डेट के भी बिजनेस कर सकता है. विदाउट डेट ऑल्सो कंपनी कैन ऑपरेट द बिजनेस, कंपनी कैन डू द बिजनेस. ओके ना? It is not necessary to take the loan borrowing. But if you are taking the loan borrowing and you are doing the business, means there is a advantage to you. What kind of advantage? You will get some tax benefit from interest. You will get some tax benefit from interest. And there is one more benefit that we'll discuss in earning per share discussion. अब डिस्कस करूंगा मैं वो अर्निंग पर शेयर में. सपोज हियर ओनली आई एक्सप्लेन ऑल थिंग्स मीन्स यू विल नॉट अंडरस्टैंड, ओवरलोड हो जाएगा फिर. स्टेप बाय स्टेप वी डिस्कस दैट. ओके, so debt is also good. Debt is also good. But when debt is good, at what rate you are earning? If that rate is more, and at what rate you are paying that is less, then debt is good. You should raise the funds and use debt in the business. Otherwise, don't think about this. Understand? So we are discussing about what? Finance risk. So finance risk arising due to debenture. Debenture involvement is not mandatory. Even without debenture also you can do the business. So this is not mandatory. So this is avoidable in nature. Without this also company can do the business. So when business risk will increase, decrease, and when operating risk will increase, decrease, business risk will increase, decrease, when operating cost increases, decreases. And operating cost increase, decrease depends on what? Capital budgeting decision or investment decision. Okay? It means if company takes one project or incurring the amount on project, so automatically fixed operating cost increases. So business risk, operating risk increases. Similarly, finance risk is also arising due to your financing decision. So in capital structure, if there is a debenture, this risk will come. Otherwise, there is no finance risk. Okay? So operating risk is also defined variability in EBIT. Variability in EBIT. See here. Suppose this is first case. In this case, your contribution is 3 lakhs. Here also contribution is 3 lakh. Fixed cost, suppose first case 1 lakh, second case 2 lakhs. So here EBIT will be 2 lakhs. Here EBIT will be 1 lakh. So it means due to increase in fixed cost, EBIT changing. EBIT changing. So this is also defined as what? Variability in EBIT. Variability in EBIT. Okay? This is operating risk. This is what? Operating risk. Now finance risk. Suppose EBIT is 1 lakh. Here also 1 lakh. Now this is the debenture in your capital structure. So 10,000. Here 40,000. So this is 90,000. This is 60,000. It means your EBT is changing. Your EBT is changing due to change in interest. Okay? So this is also termed as what? Finance risk is also defined as what? Variability in EBT. Variability in. अब एग्जाम में कभी कभी क्वेश्चन देता हूं, फाइनेंस रिस्क मीन्स डैश. क्या लिखेंगे फिर? वेरिएबिलिटी इन ईबीटी. वेरिएबिलिटी इन ईबीटी. बिजनेस रिस्क डैश. वेरिएबिलिटी इन ईबीआईटी. मालूम रहा तो लिखेंगे, नहीं तो चॉइस में छोड़ना पड़ता. फिर तुम्हारा रिस्क बढ़ जाता वहां पर. क्या बढ़ जाएगा? तुम्हारा रिस्क बढ़ जाएगा, पास होने का रिस्क. ओके, इसलिए पूरा समझाना पड़ रहा है मेरे को. ओके, तो देखिए अब. तो फाइनेंस रिस्क कैन बी डिफाइंड एज वेरिएबिलिटी ऑफ ईबीटी. इट रिजल्ट्स बिकॉज ऑफ फंड्स बियरिंग फिक्स फाइनेंशियल पेमेंट. फिक्स फाइनेंशियल पेमेंट मीन्स व्हाट? इंटरेस्ट एंड प्रिंसिपल अमाउंट ऑफ डिबेंचर. इंटरेस्ट एंड प्रिंसिपल अमाउंट ऑफ डिबेंचर. इट इज अवॉइडेबल. क्या बोला मैं? बिना उधारी के भी जिंदगी गुजार सकते हैं. इट इज एसोसिएटेड विथ कैपिटल स्ट्रक्चर डिसीजन. Plan 1, Plan 2, 1 lakh debenture, 4 lakh debenture, capital structure. So it is measured by financial leverage. किससे measure होता है ये? Financial leverage. So this finance risk will not affected from your business fixed cost. This risk is generally affected from capital structure. Which structure? Capital structure. So I hope this is clear. What is business risk? What is finance risk? Understand. Okay. Up operating leverage we will study. Now we will study what? Operating leverage. So operating leverage is nothing but way of measuring the operating risk. Way of measuring the operating risk is called as what? Operating leverage. Already we understand. Clear? So operating risk, if you want to measure the operating risk of the business, then which leverage will be used? Operating leverage. So when operating risk will increase, decrease? When your fixed cost increase or decrease. वही लिखेंगे यहाँ देखिए. Operating leverage is a measure of business risk. Operating leverage is defined as firm's ability to use fixed operating cost. Ability to use fixed operating cost means how you are using your fixed cost. If you are utilizing your fixed cost in better way, business will grow, business will earn good returns. If you are not operating your business or not managing your fixed costs, you will cannot expect the good returns. So how to use the fixed operating cost? To magnify the effect of change in sale on its EBIT. This is explained already. Explained or not? You are incurring fixed costs, so your sales should increase or not. बोला है points. Your sale is not increasing. You are interested to increase fixed cost? No. If sale increasing, then only will think about extra increase in fixed cost. If sale not increasing, nobody will think about increase in fixed cost. So ultimately, fixed cost will be increased when there is a indication, when there is a signal कि future sale will increase. In future sale increases means EBIT will also increase ना? EBIT will increase or not? Yes sir. इसलिए क्या वर्डिंग दिया है उसने? Use fixed operating cost to magnify the effect of change in sale on its EBIT. Okay? So percentage change in EBIT occurring due to a given percentage of change in sale. So this is formula actually. This is what? Formula. Means how to calculate the operating leverage. Operating leverage is calculated in two different ways. क्या है देखिए दो different ways. This is finance risk. This is arising because of fixed interest on debt और principal amount also. Okay, principal तो नहीं लिखूंगा पर बाद में लिख सकते हो उसको. चलिए. Now fixed interest on debt and fixed obligations लिख देंगे. Fixed obligations. Now if interest increases, then finance risk will also increase. If interest decrease, finance risk will also decrease. So this risk is measured by financial leverage. This risk is measured by financial leverage. Now we are discussing how to calculate the leverages. अभी डिस्कस करेंगे leverage कैसा निकालते हैं. So operating leverage can be calculated from two different ways. First way is contribution divided by EBIT. This is the first formula. First formula for calculating operating leverage is what? Contribution divided by EBIT. Okay. Next formula. One more formula is also there here. परसेंटेज चेंज इन ईबीआईटी पे परसेंटेज चेंज इन सेल. ओके, दो फार्मूला रहेंगे आपके पास. पूरे फार्मूलाज दिए हुए हैं, देख सकते हैं आप. पेज नंबर 2 पर मिल जाएगा आपको. ये कहाँ पर मिलेगा? पेज नंबर 2 इन योर मटेरियल. ओके, okay. Now why these two formulas are coming, we'll discuss, don't worry. So far you understand the crux of the leverage analysis. Now why this formula is coming, that also we'll discuss. Wait. Now financial leverage. Financial leverage is measured by EBIT by EBT. EBIT by EBT. If there is no preference shares in the structure, this formula will be used when there is no preference shares in the structure. If there is a preference share, formula में change हो जाएगा. There is a change in formula. Okay, this formula will be used when no preference share. अभी कुछ भी मत लिखो आप. And there is no preference share capital. Okay, so another formula is when there is a preference share given. What is the formula? I will explain. Wait. Next formula is percentage change in EPS divided by percentage change in EBIT. Okay, percentage change in EPS divided by percentage change in EBIT. Clear? This is the another formula for financial leverage. Okay, ये दो फॉर्मूला से आपके पास यहाँ पर पेज नंबर 2 पर सेकेंड पॉइंट में मिल जाएगा. ओके, नाउ कॉन्सेंट्रेट ऑन दिस, व्हाई वी आर यूजिंग दिस फॉर्मूलास. स्टेप बाय स्टेप वी डिस्कस दिस. So first we are discussing about operating leverage. What we are discussing? Operating leverage. तो देखिए ये फार्मूला है उसके. डिग्री ऑफ ऑपरेटिंग लिवरेज, कंट्रीब्यूशन डिवाइडेड बाय ईबीआईटी और परसेंटेज चेंज इन ईबीआईटी डिवाइडेड बाय परसेंटेज चेंज इन सेल. दिस इज द फार्मूला. Now why this percentage change in EBIT divided by percentage change in sale formula is used? This particular formula will be used when we have different situations. When we have different. Change कब आता बोलो मेरे को? एक situation है तो change आता, दो है तो आता. When there is only one situation, change will come. When two situations are there, change will be come. When there are two situations, existing, proposed, present, proposed. When two situations are there, then only change will come. If there is only one situation, change will take place. No. So second formula will come into existence when two situations will be there. This is present, this is proposed. Then the second formula will come. If only one data is given, no two situations are there, directly you should use first formula. Very simple. Understand? So when to use first formula, when to use second formula. When only basic data is given, two different situations are not given, you should follow first formula. When two situations are given, present, proposed, situation 1, situation 2, then second formula will come. You can calculate from first formula also, you can calculate from second formula also. Clear? Now why this formula coming? Try to understand my explanation. So far what I explained, when to use formula and what is the formula. Now why this formula coming, I am explaining now. ओके, अभी तक क्या समझे आप लोग? फार्मूला क्या है, कौन सा फार्मूला कब इस्तेमाल करना है, फार्मूला बनाए कैसा वो भी नहीं समझाया मैं आपको. नाउ आई विल एक्सप्लेन. चलिए कॉन्सेंट्रेट. Suppose this is income statement. Yeah, first suppose there is a sales. Sales suppose 10 lakhs. Suppose variable cost is 4 lakhs. So contribution how much? 6 lakhs. Then minus fixed cost. Suppose fixed cost is 4 lakhs. Then this 2 lakh is what? EBIT. Now I want to calculate the operating risk of the business. What I want to calculate? Operating risk of the business. मुझे क्या पता करना है? Operating risk of the business. So this leverage analysis का मतलब क्या है? रिस्क रिटर्न रिलेशनशिप. Risk return relationship. Okay. So in this data, what is your risk? Fixed cost. Fixed cost. What is your return? EBIT. What is your return? EBIT. Okay. So before this risk, what is the return? After this risk, what is the return? Before this risk, what is your return? Contribution. What is your return? After this risk, what is your return? EBIT. इसलिए फार्मूला बनाया उन्होंने contribution by EBIT. This is the reason why this formula is coming. Before fixed cost, what is your return? Before CMA तुम्हारी जिंदगी सुकून की थी, आराम से मजे कर रहे थे, फिल्म देख रहे थे, दोस्तों के साथ घूमने फिरने जा रहे थे. जैसा CMA ज्वाइन कर लिए सब पैक हो गया शेड्यूल. तो बिफोर आफ्टर चेंज होता है. तो बिफोर फिक्स कॉस्ट विदाउट दिस व्हाट इज योर रिटर्न? कंट्रीब्यूशन. आफ्टर दिस व्हाट इज योर रिटर्न? EBIT. ओके. तो रिस्क रिटर्न रिलेशनशिप से फार्मूला क्या आएगा? कंट्रीब्यूशन is before fixed cost, what is return? Divide by EBIT. After fixed cost, what is the return? तो पहले ये था, बाद में यहाँ फिक्स कॉस्ट के कारण बदल गया. Because of fixed cost it is changed. Because of risk it is changed. So because of risk how much changed? Because of risk how much changed? You have to calculate that. See, this is 6 lakhs. This is 2 lakhs. How much? 3 times. This is 3 times. Okay. Understand? Suppose if there is no fixed cost तो कैसे भी रहता है बिजनेस में, कंपल्सरी रहता है ना. Without fixed cost we cannot think business. For example purpose I am saying. Suppose if there is no fixed cost, अभी fixed cost है ही नहीं समझो. There is no fixed cost. Okay. And you are calculating the operating leverage. So if there is no fixed cost, operating leverage calculation required? No. Because there is no risk. There is no risk. Risk ही नहीं है तो तुम calculate क्या करेंगे फिर वहां? So if there is a fixed cost only, operating leverage will take place. If there is no fixed cost, there is no risk. So operating leverage not required. Understand? Now second situation. Suppose second situation, sales same 10 lakhs. Same रखो. Variable cost also 4 lakhs. Contribution 6 lakhs. Now fixed cost is 2 lakhs only. Now EBIT how much? 4 lakhs. Now your business risk increase, decrease? Decrease. Previously fixed cost how much? Now how much? Decrease हो गया ना, तो leverage भी कम आता. Leverage भी कम आता. This is first situation. Now second situation, 6 lakhs. EBIT how much? 1.5 times. It means previously your fixed cost is 4 lakh. Now your fixed cost is 2 lakhs. So how much decrease? 2 lakhs. Okay. So 2 lakh by 4 lakh, 50% decrease हुआ ना? So your leverage will also decrease by same. Your leverage will also decrease by same. जितना fixed cost कम होगा उतना ही leverage भी कम हो जाएगा. Suppose in third situation I increase fixed cost to 6 lakhs. या कुछ और बढ़ा दिया, 5 lakh कर दिया मैं. So it will be more than 3 times. It will be more than 3 times. In very simple words, fixed cost more means leverage will be more. Fixed cost less means leverage will be less. But fixed cost is not used in formula. Before fixed cost, what is the return? After fixed cost, what is the return? Return से ही calculate होता है. Here cost will not come. Financial leverage formula also, operating leverage formula also. In both formulas, return ही आते. Cost will not come. So before interest, what is earning? After interest, what is earning? In financial leverage. Before fixed cost, what is the earning? After fixed cost, what is the earning? Operating leverage. Understand? चलिए clear है ये? Yes, all students. मैं जो है मोटिवेट कर अननेसेसरी बच्चों को मीन्स ज़्यादा मोटिवेशन करके कोर्स में रखना नहीं चाहता हूँ. मैं पहले क्लास में मैं क्लियर बोल देता हूँ, भाई पढ़े तो पास होते, नहीं तो जाते. जिसको समझ में आया कंटिन्यू करना, नहीं समझ में आया गुड बाय कर देना, खत्म. मैं बच्चों को ट्रैप करने की कोशिश नहीं करता हूँ यहाँ पर. क्यों? बच्चे रियलाइज बाद में करें मैं क्यों अननेसेसरी फंस गया इसमें बोलकर. तो एक तो रिजल्ट नहीं आता, हमारा लॉस, बच्चे का भी लॉस. बराबर. तो शुरू में बता दे रहा हूँ कि इफ यू लर्न इन कॉन्सेप्चुअल वे देन ओनली यू कैन पास. हवाई पढ़ी, खत्म, अब गुड बाय कर देना उसको. चलिए, so next is financial leverage. Financial leverage is a measure of finance risk. Financial leverage is defined as firm's ability to use fixed interest bearing payments arising due to involvement of debt in capital structure. So percentage change in EPS occurring due to given percentage change in EBIT is called as what? Financial leverage. So what are the two formulas? EBIT divided by EBT or percentage change in EPS by percentage change in EBIT. This formula will be used when there is no preference capital. If there is a preference capital, formula will change. EBIT divided by EBT minus preference dividend divided by 1 minus tax rate. फार्मूला बदल जाएगा वहां पर. क्या आ जाएगा? ये वाला फार्मूला आ जाएगा. तो you should be very careful. In question preference share capital given, स्प्लिट ब्रेकर आ गया समझना. This formula will not come. This formula will come. Okay? Clear? Why this formula is coming? Because on preference dividend also, nowadays, preference dividend is treated as liability ना, because of Indian accounting standards. उस पर भी थोड़ा टैक्स निकालना पड़ता है अपने. क्या निकालना पड़ता है? टैक्स. बिफोर टैक्स क्या था? प्रेफरेंस डिविडेंड. So that we have to calculate and it will be adjusted in earning before tax. It will be adjusted in earning before tax. So from earning before tax, if you subtract complete preference dividend, before tax preference dividend, then net earning will come. So according to that, this will be calculated. I will explain one more time. Don't worry. When we start practical questions ना, मैं इसको और ज़्यादा डिटेल में बताऊंगा. Don't worry. इसके लिए टेंशन मत लो. I will explain in very detailed. Right now, you should concentrate on these formulas. Okay. Now, next, why this percentage change in EPS, percentage change in EBIT coming? Okay. This also we have to understand, and this also we have to understand. Okay. So with one example, I will explain this. Don't worry. ये दोनों मैं examples से समझाऊंगा. This also and this one also. Because 2 levels will be required. क्या चाहिए उसको? 2 level चाहिए उसके लिए. So first you should concentrate on this basic formula only. Step by step, gradually you develop. Once you expert in this, then we'll come to this one. Okay? Right. Now one more leverage is also used, that is combined leverage. That is what? Combined leverage means if you want to check total risk of the business. You want to check total risk of the business. Business risk also, finance risk also. Then combined leverage is used. What is used? Combined leverage is used. So combined leverage is the combination of business risk, finance risk. Multiply कर देना दोनों को. Operating leverage into financial leverage. Operating leverage into financial leverage. What will come? Sorry, financial leverage, operating leverage will come combined leverage. प्लस नहीं करना है, मल्टीप्लाई करना है. Okay? Or you can use another formula also. Contribution by EBIT. Contribution by EBT. Not EBIT. देखिए एक्सप्लेन करूंगा मैं. Now, this is the operating leverage formula. This is the financial leverage formula. You multiply these two formulas. Operating leverage is contribution by EBIT. Financial leverage is EBIT by EBT. So combined leverage is what? Operating leverage into financial leverage. Operating leverage is what? Contribution by EBIT. Financial leverage is what? EBIT by EBT. Okay, so ये EBIT EBT cancel हो जाएगा. Ultimate formula is what? Contribution by EBT. Contribution by EBT. Okay. Now financial leverage we are understanding now. Suppose sales. This is first situation 10 lakhs. Second situation also 10 lakhs. Minus variable cost. This is contribution. Next is fixed cost. ठीक है, 4 लाख से रखेंगे इधर. इधर भी 4 लाख से रखेंगे. Next, this is EBIT. Now interest. Suppose we have two plans here. Plan 1, we have 10% debt, 1 lakh. Suppose plan 2, we have 10% debt, 4 lakhs. So first situation interest is how much? 10,000. Second situation interest is how much? 40,000. So this is 190. This is 160. Okay. Now this is earning before tax. Clear? Now before interest, what is your earning? 2 lakhs. After interest, what is your earning? 190. So your financial leverage will be earning before interest and tax by earning before tax. So because of interest only earning changing na, so that impact we will consider. So 2 lakhs divided by 190. Here 2 lakhs divided by 160. So कितना हो रहा है? First answer is how much? 2 lakhs divided by 190. 1.05. Yeah? Next is 2 lakhs by 160. 1.25. So here your interest amount is high. So financial leverage is also high. Here interest amount is less. Financial leverage is also less. Clear? Understand? If first you should understand these formulas भाई. पूरा एक साथ नहीं समझ में आएगा क्या? अभी तुम नए नहीं, अभी तो आए ग्रुप 1 लिख के. First you should understand these basic formulas. This we'll discuss after you understand this too. Okay? Here in capital structure I have not taken preference shares. If there is a preference share, this formula will not come. Formula will change. We have to adjust preference dividend also. We have to adjust preference dividend also. Understand? So financial leverage. Now all students clear with this? Clear? Huh? Right. Combined leverage is not very difficult to understand. It is a combination of both. It is a combination of both. Now suppose you are a finance manager. You are a finance manager. Now what should be the ideal situation for the business? What should be the ideal situation for the business? It means finance risk should be higher, operating risk should be higher, or finance risk should be lesser, operating risk should be lesser. So always better situation is what? Risk should be less only. जिंदगी में रिस्क कम है तो खुश रहते अपन लोग, नहीं तो टेंशन में रहते अपन लोग. अब तुम लोग सीए ज्वाइन कर लिए, सीए में ज्वाइन करिए, टेंशन रहता ना रहता है भाई, पढ़ना है, पास करना है, मॉर्निंग जल्दी उठना पड़ता है. कोई अगर खाली बीकॉम करे तो नॉर्मली रिस्क फ्री लाइफ, रिलैक्स लाइफ. बट आफ्टर 25 ईयर्स टेंशन ही टेंशन रहता फिर भाई, जेब में पैसा नहीं रहता है. फिर अर्निंग है तो आगे की जिंदगी खुशहाल है. अभी सुकून है तो आगे एक दुख रहेगा लाइफ में आपके. अब थोड़ा टेंशन डाल लो, परवाह नहीं. सपोज इफ यू आर लिविंग ए रिलैक्स लाइफ राइट नाउ, इन फ्यूचर यू विल स्ट्रगल, बिकॉज फ्यूचर डिपेंड्स ऑन अर्निंग्स ओनली. टमाटर का रेट सेब के बराबर हो गया तो पैसा होना जरूरी है नहीं है. विदाउट अर्निंग यू कैन सर्वाइव. Not possible. So high earning required. So high earning means you should qualify in these courses. So right now you should take risk and complete this course at any cost. Then your future will be secure. 3 years hard work, 30 years return. Simple formula. 3 years hard work, 30 years return. 3 years relaxed life, 30 years problems. दो ही शब्दों में बोलूंगा मैं. 3 years hard work, 30 years returns. 3 years relaxed life, 30 years problems. Choice is available with you. Okay now? So from this chapter what we understand so far? Operating leverage, financial leverage, combined leverage. How to calculate the operating leverage, how to calculate the combined leverage, how to calculate the financial leverage. What is the meaning of all this? We understand. Okay? चलिए first I will check any online students are having doubt. No doubt. So till this, no students is having any doubt. Okay. चलिए now concentrate. I am explaining the second formula, percentage change वाला. What I am explaining? Percentage change formula. Okay. Suppose revenue of a company 10 lakh rupees, variable cost 6 lakh rupees, fixed cost 2 lakh rupees. अभी वही सेम एग्जाम्पल डाला मैं आपको. Okay. So you are earning before interest and tax so much? 2 lakhs. 10 lakh minus 6 lakh variable cost, contribution 4 lakhs, fixed cost 2 lakhs, so earning before interest and tax 2 lakhs. Okay. So this is already you understand. Now suppose sales revenue increase by 20% or decrease by 20%. Two situations we are developing here. Okay. One is sales increase by 20%. Another is sale decrease by 20%. Because if you want to use second formula, percentage change formula, you need two situations. How many situations? Two situations. So if sale increase by 20% and if sale is decreased by 20%. So previously how much is your sale? 10 lakh. Previously sale कितना था? Now it is increased by 20%. So new sales will be how much? 12 lakhs. And it is decreased by 20% means 8 lakhs. Understand? Right? Previously your sale is 10 lakh. Increase by 20% बोल तो कितना आएगा? Decrease by 20% means how much? 8 lakh. इतना तो समझ में आ रहा ना? यहाँ पर भी परेशानी हो रही है क्या? Minus variable cost. Variable cost is 60% of sale. How much? So previously 10 lakhs into 60%, now 12 lakhs into 60%, 8 lakhs into 60%. Always remember variable cost will be always in proportion with or proportionate to sale. If sale increase, variable cost increase. Sale decrease, variable cost will decrease. So 60%. So 12 lakhs into 60%, 720. 8 lakhs into 60%, 480. Now contribution. Now if sale increasing or decreasing, fixed cost is changing or no? Here fixed cost is not changing. Because what is mentioned here? Only sale change mentioned. क्या mention करें अपन यहाँ? Sales change. We mentioned any fixed cost change? No. So fixed cost will remain same. Fixed cost will remain same. So you are earning before interest and tax how much? 280, 1 lakh. Now what is the formula for operating leverage? Percentage change in EBIT divided by percentage change in sale. Second formula. Percentage change in EBIT by percentage change in sale. This is operating leverage. This is what? Now percentage change in EBIT. Percentage change in EBIT. So EBIT, how much right now? 2,80,000, 1 lakh. स्क्रीन पर देखिए 2,80,000, 1 lakh. This is difference ना. So percentage change we have to calculate. So change in EBIT how much? 2,80,000, 1 lakh, 20,000. Clear? सिंपली देखो ना भाई 2,80,000, 1 lakh, 20,000 है ही नहीं है. Clear? So you should compare this 2,80,000 with previous 2 lakh, and you should compare this 1,20,000 also with 2 lakhs. Okay? So percentage change in EBIT we are calculating. So this is EBIT change divided by EBIT base. So EBIT change is 2,80,000 minus existing EBIT how much? 2 lakhs. Okay? And EBIT base means existing EBIT. How much? 2 lakhs. Into 100 kar lo. So 80 divided by 2 lakhs, 40%. So percentage change in EBIT how much? 40%. Okay? Next. Percentage change in sales. Now this is sales change and base sales. So sales change how much? 12 lakhs आया. Previously how much it was? 10 lakhs. How much? 20%. Okay? Now भाई 3 लेवल है अपने पास, देखिए फिर से सुनिए, अच्छे से ध्यान से सुनिए. Once again I am repeating. This is existing. This is proposed 1, this is proposed 2. So existing sales 10 lakhs. This is plus 20% है. This is minus 20% है. This is 12 lakhs. This is 8 lakhs. Okay? Variable cost 60% of sales. So 6 lakhs, 720, 480, 4 lakhs. ये कितना है? 480. This is 320. This is contribution. Minus fixed cost. Fixed cost will remain same, no change. So 2 lakhs, 280, 120. This is what? EBIT. Now change in EBIT करना है आपको. Change in EBIT. So this minus this 80,000. Yeah, minus 80,000. Okay. Next, change in sale. 10 lakh, 12 lakh. How much change? Here minus 2 lakhs. Now operating leverage. Percentage change in EBIT by percentage change in sale. So if you are calculating percentage change in EBIT, so formula is what? Change in EBIT by base EBIT. Base EBIT. So change how much? 80. Base EBIT how much? 2 lakhs. So 40%. Next, percentage change in sales. Change in sale by base sales. So change in sale how much? 2 lakhs. Base sales how much? 10 lakhs. So this is how much? 20%. Okay? Understand? Clear hai nahi? Now first I am calculating operating leverage. Operating leverage for existing level. What is the formula? EBIT by contribution by EBIT. So contribution how much here? 4 lakh. EBIT how much? 2 lakhs. How much? Other formula, और एक भी formula है ना? Percentage change in EBIT. Percentage change in sales. तो percentage change in EBIT 40 है, percentage change in sale 20 है, कितना रहा? That's it. So this second formula is used when two levels are there. Only one level रहे तो तुम दिमाग खराब कर लो तो भी नहीं आता वो, कहाँ से आएगा वो? Starting only I explained ना कि two levels required. Now second also if you calculate same answer will come. माइनस माइनस ऑटोमेटिक कट हो जाता है, राइट? माइनस माइनस विल कैंसल ना, अल्टीमेट विल बी 2. अल्टीमेट विल बी 2. So I calculated for situation 1, situation 2 not required. फिगर सेम है, माइनस में सिर्फ देखो माइनस 80 है, वैसे माइनस तो मैं दोनों डिनोमिनेटर में डालूंगा तो माइनस माइनस कैंसिल होता ना, तो 2 ही आएगा वो भी. Ultimately understand or not both formulas? Second formula applicable when two situations are there. One is existing, another is proposed. Otherwise you should continue with first formula only. Okay? तो ऑपरेटिंग लीवरेज का पोस्टमार्टम कर दिया मैं पूरा. क्या और कुछ इसमें चाहिए क्या? और एक चीज है, सुनिए. In examination sometime they will give question in different way. उन्होंने क्वेश्चन में क्या करेगा? परसेंटेज चेंज इन सेल्स दे देंगे. उन्होंने क्या देंगे? परसेंटेज चेंज इन सेल्स. तो परसेंटेज चेंज इन सेल्स 20 है, समझिए, राइट? और परसेंटेज चेंज इन सेल दे दिया है और ऑपरेटिंग लीवरेज दे दिया है 2. ऑपरेटिंग लीवरेज क्या दिया उसने? 2. एंड ही विल जनरली आस्किंग द स्टूडेंट कैलकुलेट परसेंटेज चेंज इन EBIT. परसेंटेज चेंज इन EBIT तो क्या पूछेगा उन्होंने? परसेंटेज चेंज इन EBIT. तो कुछ नहीं करना है आपको, शुड सब्स्टिट्यूट इन दिस फार्मूला. सो ऑपरेटिंग लीवरेज हाउ मच? 2. परसेंटेज चेंज इन EBIT वी डोंट नो. परसेंटेज चेंज इन सेल ऑलरेडी गिवन ना, कितना है? 20 है. तो परसेंटेज चेंज इन EBIT कितना जाएगा? 40%. This is the calculation, okay? And one more point. If you analyze this situation properly, if sale is 20%, operating leverage is 2, EBIT is 40%. It means EBIT is almost all doubling here. EBIT is almost all doubling here. So that effect also we have to understand. तो यहाँ पर देखिए ध्यान से, सपोज दिस पर्टिकुलर पॉइंट लास्ट में देखिए, दिस वन, सपोज इफ ऑपरेटिंग लीवरेज इज 1.5, हाउ मच? 1.5. If sale increase or decrease by 1%, if sale increase or decrease by 1%, if sale increase by 1% or sale decrease by 1%, clear? So operating leverage how much? 1.5. Sale increase or decrease by 1%. So your EBIT will also increase or decrease by 1.5%. देखिए क्या समझाया थोड़ी देर पहले मैं आपको. Your percentage change in sale how much? 20. Okay. Operating leverage how much? 2. Percentage change in EBIT how much? 2 into 20. It means if this increasing, this will also increase or not? If this decreasing, this will also, if this increasing, this will increase or not? If this decreasing, this will decrease or not? वही बोल रहा है थ्योरी में उन्होंने. If this and this increase decreases, this will also increase decrease. It means if operating leverage increase or percentage change in sale increase, दो में से कुछ भी पढ़ने दो, ultimately what will increase? Percentage change in EBIT will increase. Percentage change in EBIT will increase. Suppose this is decreasing, this will also decrease. Okay? But important point what we have to understand here is, suppose if operating leverage is 1.5, operating leverage is 1.5 and sales percentage change means percentage change in sales, percentage change in sale is 1%. So your EBIT will also change by 1.5%. Your EBIT will also change by 1.5% क्योंकि ये दोनों को मल्टीप्लाई करते ना अपन. See this and this you are multiplying or not? Multiply हो रहा है नहीं हो रहा है? So in what direction? If operating leverage is 1.5, sale increase or decrease by 1% means your EBIT will also increase decrease by 1.5%. Understand? I will repeat one more time. Wait. थोड़ा यहाँ पे क्लियर नहीं है. I will repeat one more time. देखिए इधर. This is last point. Suppose your operating leverage is 1.5. Okay? And percentage change in sales. ये 1% है समझिए. कितना है ये? तो what is the formula, operating leverage formula? Percentage change in EBIT by percentage change in sale. So operating leverage how much? Percentage change in EBIT we know? No. ये missing है. This is missing. और percentage change in sales 1 है तो मल्टीप्लाई करना पड़ेगा आपको. सो परसेंटेज चेंज इन EBIT विल बी हाउ मच? 1.5%. So it means if sale increase or decrease by 1%, what is the operating leverage? In same direction, EBIT will also increase decrease. Understand? अब इसके जगह पर मैं फिगर्स बढ़ा दिया. सपोज ऑपरेटिंग लीवरेज इज 5 कर दिया इधर. ऑपरेटिंग लीवरेज हाउ मच? 5 and percentage change in sale परसेंटेज चेंज इन सेल, मैं 2% कर दिया ये, सो EBIT कितना रहेगा 10. सपोज दिस इज 1, EBIT how much 5. सपोज दिस इज 3, EBIT how much 15. सपोज दिस इज 4, EBIT how much 20. सपोज दिस इज 3 बट दिस इज 10, 30, खत्म. यही है, और क्या है उसमें. ओके, so if you understand this, you can solve any problem here. Okay, so next class we'll start the practical problems also. First you can do one thing. First all formulas, all notes you should copy in next class. Then we start the practical questions. ये पूरे notes copy कर लेना आप लोग. Okay. हमेशा आइडियल क्या रहता है, कम रहना. इफ हाई मीन्स रिस्की रहता है वो. ओके, बोथ शुड बी लो रहना, आइडियल. क्लियर? दिस इज इनकम स्टेटमेंट, एवरीथिंग इज अवेलेबल हियर. आफ्टर दिस वी शुड स्टार्ट प्रैक्टिकल क्वेश्चंस. ओके ना, कॉन्सेप्ट क्लियर? राइट. चलिए, एनी स्टूडेंट हैविंग डाउट? No doubt, right. So next class we'll start the practical problems. So good day, we are closing the session here only.